Shut up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. Have a calculator on hand so we can do some easy math. If you have a question or a stock you want to go over together live, leave it in the comments and we'll do it together. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right. Happy Wednesday morning, everybody. Let's look at our open positions. We've got a T-bill auction tomorrow morning, so just ignore that one. All short call spreads for January expiration coming in nicely. AMD got filled this morning. We'll go over that one in a second. Dow Jones trying to get to 32. Right now we're at 56. Looking good. No problems on that one. Roku was the roll from December expiration to January expiration. Sorry about that. We're trying to get to 34. Right now it's 62. Right on target. SPY, same thing. This one's a roll as well. We got some work to do on this one, but like I said, we got some time. If not, we can always roll. IWM, this one's coming back in our favor nicely as well. Trying to get to 20. Right now we're at $1.26. XBI, some work to do on this one as well. We'll consider rolling some of these either later this week or early next week, okay? Why don't we start off with the AMD win? Let's look at the chart really quick. I don't remember when we opened this position, but we sold the 150. Sold the 150 and bought the 155. So I imagine somewhere back here, sometime in December. Moved against us to the point where the 150, our short strike, was briefly in the money for 2 days. Never closed in the money, though. And then as we had to sell off the past 2-3 days, we've moved in our direction, and we made 34 cents. So if you want to take your calculator out, 34. We made 34 divided by 500. That's a 6.8% return in about a month or so. That's not bad. I made 34 bucks. Great. All right. As the market continues to sell off, all these will keep becoming more and more in our favor. All right. A lot of news today. First up will be Verizon Wireless, VZ. So despite the market being down overall, Verizon's up because of an upgrade, I believe. KeyBank upgrades. There we go. Earnings are January 23rd, though, so we're about 20 days till expiration. Sorry, 20 days till earnings. We got a nice yield, too. So I think we're going to hold off on this one until after the earnings report. It'd be nice to sell a call spread here. You should hit resistance actually now, or did this morning. But for now, we'll hold on this one. Next up, Apple. Following up on Apple from yesterday. Had a bad day yesterday, and the sell-off in Apple's continuing today. Earnings on February 1st, so we got a little less than a month. I would like to sell the put side. And I've got on here selling the put side at 180. So even though we're a month till earnings, if we can get to 180 within the next day or so, I'll sell the put side. You should get a bounce just because we have some support coming up, both at the 200-day and this closes right here. Okay? So hold on Apple. Next is Disney, DIS. A lot of activist news this morning. Board seats and nominations for that. But not a lot of movement. It's pretty much flat for the day. Earnings are the 7th, so about a month away. Could look at the put side here. Or this is all February expiration. If you sold the 80 and bought, well, you can just sell the 80 right out. You don't have to buy coverage if you don't want to. Hi. No. I'm surprised this one's not more liquid. We got 5-cent spread here. 18 contracts traded today. The call side is way more liquid than the put side. You'd want to sell the 80 on the put side, but I'm not sure. Let's see, where's 80 on the 80 on the chart's all the way down here. So there's a lot of volatility priced into this one. We'll keep Disney on the radar. If we have any continued sell-off, this will be one to sell puts on as it gets closer down. Okay, moving on. Sherman-Williams, SHW. It's an odd one to be on the list today. They had a downgrade. It's a silly one to downgrade. Downgrade yesterday and downgrade today to neutral. Earnings at the 25th, so we're too close to earnings to do anything here. So we'll wait till after earnings, come back and see what we can do. Next up, Rivian. Following up Rivian from yesterday's numbers came out, not so good. Down again today, some follow through. Interesting chart. Hold on, when are earnings? Earnings are the 21st, so we have well over a month, so that's good. And actually, I think February expiration is before the earnings report. So that's, you can see March is more volatile than February. That's because earnings aren't included in February expiration. So Rivian, let's look at the chart here. It's coming up to the 200-day around here, which also lines up with some, you get support at both 20, which it's already passed, and then down here there's a lot of support, anywhere between 17 and 18. So want to sell puts? Maybe not today. If it continues to sell off a lot today, then yes, sell the put side. You'd want to sell the 15 and buy 12.5. I'll do the math there. 29 minus 9 is 20, so 10 divided by 250. It's only 4%. The call side, if you sold 25 and bought 27.5, 47 minus 26 divided by 2 divided by 250. Skip this one. It doesn't pay. Both sides are only paying 4%. That's not that great. Although, just looking at the chart, this is what we're kind of looking for. Have big moves up, you want to sell the call side. Once you start having big moves to the downside, you want to start selling the put side, okay? Next, Moderna had a rally of a day yesterday. Holy smokes. Hit the 200-day perfectly and now is selling off slightly. Let's look at the call side here for Moderna. I know ideally you would want to sell the call spread yesterday at the end of the day. I was at work and probably doing other things, so I couldn't. If you want to sell the call side now, if you sold the 130 is a little too close, but the 135 is a little too far out. So let's take a look at both. And liquidity's not the best here. Son of a gun. If you sold 135 and bought 140, what do you get? 198 minus 142 divided by 2 divided by 500. That's 5.6 there. Son of a gun. 130. If you sold 130 and bought 135, 278 minus 203 divided by 2 divided by 500. That's 7.5% there. So if you got the stomach for it, I would sell the 130 by the 135, but liquidity is kind of an issue. 130 is right here on the chart. This one's really tempting. Just the liquidity concerns me, because if this continues to move against my position and it becomes more and more in the money, becomes more illiquid, it becomes even harder to roll if we need to roll. Son of a gun. We'll start. If there's anything better, I'd rather go with that. But for now, hold on Moderna. Everything else for Moderna makes sense aside from the liquidity. We got earnings not in the picture. We have big move up, hitting the 200-day, hitting resistance from back here in August. So everything's in our favor. Just the liquidity's a little unsettling. Okay, so maybe we'll come back. BABA is next. BABA. Pretty much flat. We're going to move on right away. Still waiting for clear movement up or clear movement down, so nothing yet. CCJ tried to open something on the put side yesterday, didn't get filled. It opened up down today, has already come back to flat. Put side. If we sold 36 and bought 32 today, that's 55 minus 18 divided by 2 divided by 400, only 4.6% now. So if the trade got filled yesterday, great. Well, actually, I remember it wasn't a spread, it was just straight out puts, right? CCJ, where is it? Trying to sell at 40. 48. So we're trying to sell the 35 put at 48 today. Is that right? CCJ. Sell 1 February 35 put at 48. 35 at 48. Alright, so yeah. We were trying to sell the 35 yesterday at 48 cents. Didn't get filled. Right now it's at 41. I don't know if I'd open this one now. If there's a continued sell-off in CCJ, sure. We'll keep looking at it, but right now I may have missed it. Next up, Marathon Digital, MARA. It's been on a wild ride recently. Earnings. February 29th. Perfect. Talk about a roller coaster. Straight move up, parabolic, bubble burst, selling off big time. Gotta zoom out on this one. Catching support right around 20 today. If not, we can move all the way down to 16. This is a tough one. This could continue to sell off. Call side, maybe. If you sold 34 and bought 40, it's 197 minus 135 divided by 2 divided by 600, 5.1 on the call side. On the put side, if you sold 11, skip the put side. If you wanted to, just sell puts straight out, but I wouldn't want to do that. Sell 11 by 9 maybe. 30 minus 14 divided by 2 divided by 200. That's 4%. Now, there's nothing to do on the put side. Skip the put side on this one, okay? Next, ExxonMobil and Oxy. I think they both got downgrades. Yeah, so Exxon cut to neutral by Mizuho. Silly. Earnings are on the 2nd. We're about a month away. It seems on this one the ratings cut hasn't had much of a factor. Let's look at Oxy. Same story here. Cut to neutral. Earnings are February 26th. That one's a little farther out. However, no clear direction. It's kind of just hanging out in no man's land. It's had no movement since March of 2022. It's gone nowhere. So, with the lack of volatility here, you're not going to get paid for anything. Roblox is next. RBLX. Earnings are February 14th. There was news out this morning. I can't remember if it was downgrade, upgrade. I'm guessing downgrade. Anyway. No clear direction on this one. If you sold the call side, you'd want to sell 50 and buy 55. 111 minus 54 divided by 2 divided by 500. 5.7 on the call side. On the put side, sell 32.5 and buy 27.5. 53 minus 17 divided by 2 divided by 500. Is that right? 3.6. So call skew still. Where's 50 on the chart? 50's up here. I think that's fair. This one's interesting on the call side. Earnings again, February 14th. Okay, so this expiration in February does include the earnings report. That's why you're getting paid so well. Son of a gun. All right. We'll put a star by Roblox. Next up, SoFi. Downgrade, I think. SoFi, blah, blah, blah. What's going on? Downgraded to underperform at KBW. Earnings are January 29th, so we're less than a month away. Huh. You can make a case for a bounce around 758, 750-ish. We're not there yet. We're at 845. So if it can continue to slide another dollar, sell the put side. But for now, you got to hold. You'd sell the 6. Just remember, earnings are coming up soon. Pass. I think there are better opportunities. Next. Bloomin' Brands. Earnings are February 22nd. What do we have here? Veterans are added to the board of directors. Dave George and the other guy. Great. Earnings 22nd. Okay, so we got over a month till then. To a liquid. Moving on. Schwab is next. SCHW. Down 3% today. Earnings of the 17th. That's right. We've got bank earnings coming up in about a week or so. So we're going to have to hold off on all the financials just because we're too close to earnings. The news, Goldman Sachs downgrades Schwab to neutral, so that's why they're down so much. Here's our chart. Lower high, possibly lower high, lower low, but a higher low here, so that's interesting. But if I had to put money on it, I would consider the call side downward movement to continue. So, gun to my head, I'd sell the call side. You'd want to sell the 75 and buy the 77.5. I'd wish there's something in between here, but sell 75, buy 77.5. What do you get? 57 minus 31 divided by 2 divided by 250, only 5.2%. Granted, it is Schwab, it's not crazy volatile. But this is including earnings. The January contract has slightly more volatility than the February one, and that makes sense. Just because after earnings, you'll have more time to deal with whatever direction it moves in. Hold. All right, let's check out TLT. I think down again today, right? Fascinating. This is the long end of the bond market, 20-year. So we opened a short call spread on TLT at the end of December. It got filled yesterday, right? Right. So right now, you could sell the call side again with anticipated more movement to the downside, but we are at the 200-day here, and you could, not saying it's going to happen, could get support from this top back here in August as well as August. So there could be a case for a bounce around here just because of 1, 2, and the 200-day moving average. So you could sell the put side. Again, I could make this case for selling the put side and make this case for selling the call side. So kind of a no man's land here. There's no clear answer. If you want to sell the put side, February, I'd sell, you're not going to get paid for it. Sell 92 and buy 89. 48 minus 20. Divided by 2, divided by 300. That's 4.6 on the put side. Call side, sell 103 and buy 106. 71 minus 35. Divided by 2, divided by 300. 6%. So you got call skew still. $103 on the chart. I think that's what I sold. That's the exact spread we sold back here. 103 is up here. Can it get there? Absolutely. But I don't know. Interesting. This one's very interesting. Next up, let's take a look at the KRE. I know we got bank earnings coming up soon, so that'll affect... This is the small regional ETF. It's usually more volatile than the big bank ETF, the Vanguard one, I think. Never got to... I wanted to sell the call spread at 56. Never got there, so it's already selling off. Call side, February, sold 57 and bought 60. That's 56 minus 24 divided by 2 divided by 300. 5.3 on the call side. On the put side, sell 46 and buy 43. That's 49 minus 22 divided by 2 divided by 300. 4.5. So balanced on both the call and the put side. There is no skew on this one. So both sides are fairly priced. Interesting. Not enough to make a move. Gold's down big. Wow. Son of a gun. We're waiting for gold to make an all-time high again to sell the call side, but just can't seem to get there. So I wouldn't sell the call side here yet. If you sold the call side in the past couple days, congrats, you're out of the trade. You probably made your money. I would sell a put spread if it got to the 200-day moving average here at 182. Has this, I don't know if you can see it, ascending trend line here, 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 and then again would be here, but we're not there yet. Probably still have call skew on gold, so if you sold the call side, you probably get paid for it. If you sold 197 and bought oh no, the gun. You have to buy 200. $300 spread. 128 minus 87 divided by 2 divided by 300. Almost 7% there. So if I was forced to make a trade here, I'd sell the call side, sell the 197 and buy the 200. 6.8 return. 197's way up here. Remember, it says February expiration, so it's got 44 days. Can most certainly get there. When's the next Fed meeting? End of January? Yeah, so there's a Fed meeting in between here too. Lots of data to push gold up and down. I don't know. All right, let's go to our IV rank scanner and we'll sort by volume. There's going to be a lot shown up on this list just because the downward movement in the overall markets, and we have earnings coming up. So we're going to see a lot of opportunities here. So we'll just take one at a time. What time are we at? 7:40. Well, we can do a little bit longer today. SPY. So I've got my short call position for January expiration on SPY here. It's both legs are underwater, but what do we sell? So the 456, that's right here. The 461. We roll this one, waiting for it to come back in our direction. If we need to roll again, I can. But for today, February expiration on the put side. Sell 448 and buy 443. 235 minus 184 divided by 2 divided by 500. 5% on the nose for the put side. Call side. Probably still has call skew on this one. If you sold if you sold 489 and bought 494, that's 172 minus 94 divided by 2 divided by 500. 7.8%. Wow. So if you sold the call side February 489, you're looking at almost 8% return. A lot of call skew still here. Where's 489 on the chart? 489 is right here. And remember, this is February expiration. So if we have the pullback ending and we continue to move higher, it definitely could move against us. Interesting. But this move since October, this straight move up, like I've been saying for a couple weeks now, has got to have more of a pullback before we continue higher. $477 was the high. Let me do some quick math here. 477 minus 410, 67 divided by 2. $33, 477 minus 33. 444. Could catch up good balance at 444. So if this pullback continues over the next couple of weeks, you'll have your 200-day move up, and the 50% retracement is at 444 here on the SPY, which is right about here. So if this develops, you'll have your 200-day move up, 50% retracement. It could get a bounce there around 444. So just have to wait and see. Right now, since it pays so well, I would sell the call side again. Just know that the strikes are awfully close. You're getting paid for the risk, essentially. Back to the list. Tesla, earnings on the 24th. We'll skip. IWM, we have our strikes. This one's coming down hard. So we sold, here we are. We sold the 197 and bought the 200. The entire spread was underwater for a bit. Now Both strikes from mine are out of the money. That happened fast. Trying to get to 20. I think I opened it way back here. That's why. Opening a position today, that one's tricky. Call side. If you want to open the call side today, I would sell the 210 and buy the 215. Actually, you want to buy the 217. What do we get here? 144 minus, what did I say, 217? 60 divided by 2 divided by 700. 6% on the nose there. If I had opened up a new spread today, I'd sell the 210 and buy the 217. Where's 210 on the chart? 210's up here. That seems fairly priced. Put side. If you sold the 181 and bought the 174, 142 minus 76 divided by 2 divided by 700, 4.7. So there's still call skew on this one. You get paid more to sell the call side. Okay? Next. Apple, we already looked at. AMD. We got Phil today on AMD. Want to jump back in the game? I don't know. Earnings are January 30th. We're too close to earnings. But I wouldn't jump back in yet either. If I had to, I would still sell the call side. Yeah, I wouldn't open one today. It's starting to price in earnings, that's why. Marathon, we already looked at. SoFi, we already looked at. Citigroup, garbage, has earnings on the 17th. Amazon. There was news on Amazon today, but I think earnings are too close. Earnings are February 1st, so we're less than a month away. What was the news? Legal uproar, seller outright. I don't know. Too close to earnings to do anything on this one. I'd hold on this one. Amazon, TLT, we already looked at. Silver, I'd stick to gold. Microsoft. That's awfully high for Microsoft. MSFT. Earnings are on the 23rd. That's right. 20-day still earnings. We'll follow up afterwards. Also, this list is going to be relatively active just because this is the IV30. So in the past 30 days, just in general, because of the holiday season, the market has been very, very, very calm. So any movement at all will make the IV30 spike. And that's what's happening. But that's good for us because option prices are now relatively more expensive. Coinbase, yeah, I said Coinbase was down big. All these bubbles are popping in these all unprofitable businesses, like Affirm, Coinbase, had this big move up and then 2 big down days, down again 4%. Earnings for Coinbase are February 20th. I know liquidity on this one's always an issue. Call side. You'd want to sell 200 and buy 210. Ideally 220, $2,000 spread. It's 5% right on the nose. But liquidity is concerning, especially if it moves against you. Can't do it. Put side, anything better? Put side's a little bit more liquid. If you sold 100 and bought 90, if you sold 100, bought 90, 217 minus 131 divided by 2, that's only 4.3%. So you get paid more to sell the call side, but the liquidity would keep me up at night. Moving on. PayPal. Earnings are on the 8th. It's a little more than a month away. Good chart action. Move up after earnings, continued rally up, hits the 200-day and sells off. Fascinating. Put side, if you sold the 47.5 and bought the 42.5, that's 50 minus 17 divided by 2 divided by 500, only 3% there. Call side, 67.5 is a little close, but you're going to get paid for it. If you sold 70 and bought 72.5, 88 minus 64 divided by 2 divided by 250, 4.8. Not getting paid on this one. Let's move on. Riot. GDX. Pfizer has the JP Morgan event on the 8th. Speaking about which, today's the 3rd. We should get, as we get closer to this health event, we should get a lot of buyout news from all the pharmaceutical companies. We had a lot from Bristol Myers at the end of December, so they started early, but as we get closer, Pfizer, Moderna, Lilly, all these, any potential buyouts should start happening around this conference. Meta. No. ARK. ARKK. There are no earnings, duh. The pickle that we're in now is just in general. The reason we're short call spread so heavily is everything has just had these big movements up. And now that we're selling off, the good news is our positions are starting to make all this money, which is great. But opening something new is a little tricky because now everything is hanging out in no man's land. It's too early to sell puts on all this stuff, and you kind of miss the boat on the call side. So if there's any slight movement up here, sell the call side again, but you don't want to sell the call side on down days. You want to sell the call side in the strength. And we're, like I said, we're too early to sell the put side on this stuff. So tricky. Good liquidity here. If you sold 42, actually these are some good prices on these. How about 41? If you sold 41 and bought 38, 50 minus 22 divided by 2 divided by, what did we say, 300? 4.6 on the put side. Remember, this is an ETF. Call side, if you sold 56 and bought 59, 68 minus 37 divided by 2 divided by 300, 4.6 there. So everything's equally priced. Both the call side and the put side are both equally priced, so there's no skew right now on this. And that's because we're in no man's land. Everyone that's trying to buy these dumb options doesn't know whether to buy the call side or the put side. Next. GLD we already looked at. Snapchat. They must have earnings coming up. Bank of America has earnings. Intel. Are they going to be part of a conference too? Yes. The 8th will be a big day. Intel had a hell of a year last year. Earnings for Intel are January 25th. We are too close. Let's move on. Verizon, we already looked at. Netflix has earnings on the 23rd. We're too close. American Airlines. Ugh. Block. Earnings on the 22nd. Same story like the rest. Gap up, huge move up, and now we're selling off hard. On the put side, if you sold 57.5 and bought 52.590, minus 43 divided by 2 divided by 500, 4.7 on the put side. Call side, if you sold 80 and bought 85. 80 is a little close, but we'll do it. 130 minus 73 divided by 2 divided by 500, 5.7. So call skew on this one. 80. Good liquidity too. 80 on the charts right here. If I had to, I would sell the call side here. 38. Let me do the quick math on this one. Hold on. 38 and 80. Wow, that's one hell of a move. It went from 38 to 80 in 2 months. 80 minus 38. 50. Hold on. 80 minus 38. 221, 80. 80 minus 21. 59. Should catch a bounce around 59 or so. Or 66. Ugh, this one's hard. I wouldn't mind selling puts around 50. Sorry, 60. My bad. I wouldn't mind selling puts around 60. But we're not there yet. Robinhood? No. Moderna, we already looked at. ExxonMobil, we already looked at. Next page. KRE, we already looked at. Upstart, down again. Wow. Earnings are February 13th. That's going to be included in February expiration. Yep. Pass. Hurts. Or, wow, look at the put side. Really expensive. Holy smokes. This is including earnings as well. That's why. Tempting on this. Earnings of the 13th, so we got over a month. Put side, it should catch a bounce around 31-ish, but we're not there yet. You'd want to sell the 22.5. And buy the 17.5. 76 minus 24. Divided by 2, divided by 500, 5% there. Call side. If you sold the 50 and bought the 55, 206 minus 148 divided by 2, divided by 500, 5.8. So we're getting a little bit of call skew, but not much. Upstart, Exxon, Moderna, Boeing. Those bastards at Boeing. Earnings are at the end of January, so we'll follow up after earnings, and then we'll get our revenge. Lilly. Hold. Walgreens has earnings tomorrow before the open, so we'll follow up after the earnings report. They'll be part of the healthcare conference as well. MicroStrategies. HYG. Enphase, no. Wow, look at the sell-off in Enphase. JP Morgan. Oh, that's right. Banks are coming up. JP Morgan has earnings on the 12th. They've had a hell of a rally too. JPM near all-time highs, I think. Crazy. Let's see, where are we at? They're so close to all-time highs. Same story. Look at this great march up since the end of October, with hardly any pullback and approaching all-time highs. It's unsustainable. Call side, maybe we'll do an earnings play. That'd be fun. If you sold the 185 and bought the 190, 62 minus 30 divided by 2 divided by 500, you only get paid 3%. Pass. DIA already got a position open. Should close soon. Trying to get to 32. You can most certainly make the case for still selling the call side. I mean, it's hardly had any pullback at all. If you look at the Qs or the IWM, they've had pullback. But DIA, not so much. Dow Jones ETF call side for February. We sold the 383, 388. If you sold the 390 and bought the 395, 127 minus 64 divided by 2 divided by 500, 6.3%. So if I didn't have my position open, I would do the February expiration, sell the 390 and buy the 395. 390's up here. That seems very fairly priced. That's very fair. I mean, if you look out, if you zoom out on your chart, if you have your chart open, look at the move up since October and imagine it continuing on to 390 by the end of February. Don't get me wrong, it's possible, it can definitely happen, but it just seems so silly to have such a parabolic move up without any pullback. I don't use the RSI, but if I did, it would definitely be in the overbought area. AT&T earnings on January 24th. Google, Fisker, TNA, Cleans Bark, Newmont. They must have earnings coming up. We're waiting for Newmont to get to 44. Never did. Freeport has earnings on the 24th. USO. Let's check in with oil. USO is at 77. I do like selling the put side here, but I wish you did it yesterday. If you sold today, if you sold 60 and bought 55, 81 minus 32 divided by 2 divided by 500, almost 5%. That's not crazy. Doesn't really get you out of bed in the morning. Let's look at XOP put side. You sold 125 and bought 119. That's 117 minus 62 divided by 2 divided by 600, only 4.5% there. You got to remember this is an ETF, so they don't pay as well as individual names. Call side, 150 is too close and the 155 is too far out. I'm not even going to push it. You probably get, I know you'll get paid more to sell the call side just because of the volatility in the Middle East. If you sold 150 and bought 155, what is it? 159 minus 86 divided by 2 divided by 500, 7.3%. So yeah, you're definitely getting paid to sell the call side, but for very obvious reasons. That's why I'd rather sell the put side. You just don't get paid for it. Son of a gun. Moving on. GameStop, no. GM, no. Norwegian Cruise Line. Barrick. Tiva plug. JD, maybe. Taiwan Semi. Wells Fargo has earnings. Chewy. Unity. Unity's down 5%. Let's take a look at that one. We'll kind of wrap things up here. Not a lot of opportunities just because we're hanging out in no man's land. If you sold the 30 and bought the 26, 60 minus 18 divided by 2 divided by 400, 5.2% there. Call side. If you sold 46 and bought 49, 86 minus 54 divided by 2 divided by 300, 5.3. Not enough. Goldman Sachs has earnings. Home Builder ETF, XHB. Oh boy, oh boy. This still has room to fall. Let's look at the call side on this one. If you sold the 100 and bought the 104, 76 minus 30 divided by 2 divided by 400, 5.7. I kind of like this one. Where's 100 on the chart? 100's up here. I kind of like this one. Cuckoo. Look at this move up. It's gone from 70 to 96. And this is an ETF, remember. Honestly, it could catch a bounce around 85, but if we sold the call side here, we'll be out before then. So I'm going to open up this one. February expiration, selling 100, buying 104. Okay. Liquidity is really good. We've got a 4-cent spread here. We got a 4-cent spread here. I'm okay with that. We'll go to verticals. 100, 104. We'll change this to 4. 100, 104. We'll go for 51 on the ask. Let's check our ticket here. So we're going to sell one February expiration, the 100 call. We're going to buy one February 104 call. We'll be credited $51 as you're putting $400 minus the 51. That's your risk. We'll preview this one. Double check the ticket. Sell one 100 call to open, buy one 104 call to open, February expiration. Don't have to worry about earnings on this one. We'll receive a credit of $51. Go ahead and send this one out. If it gets filled, 51 divided by 2. If this one gets filled today, set it buy to close order at 25, okay? And we'll set that as limit debit, good till canceled. Cool. Anything else? I think that'll do it for today. Good job on the AMD trade, Steve. Thank you very much. That'll be it for today. Thanks so much for watching. Tune in every morning, 7:15 a.m. on the West Coast and 10:15 a.m. on the East Coast. Go live every morning trading options. Tune in, like, subscribe, all that good stuff. Also tell your friends who are trading options to tune in as well. We'll all trade options together. Have a great day. We'll see you all tomorrow.